Yes, absolutely. Sort of big believer in the opportunity in China over time. So I do own about 100,000 shares, and my holdings have increased over time. Yeah, I think the process is very much bottom up, looking at individual companies. I don't sort of target weights in particular sectors or anything like that. It's about the individual companies and really how they stack up. And I'm looking for companies that can be much bigger over time, companies that generate good returns, and companies that have strong management teams to execute over time. And as always, I'm trying to look at companies where I think those factors are really not reflected in the stock price. In terms of finding the companies, we really spread the net wide. As you know, we try to leverage the investment trust and the flexibility that it has. So we can invest in unlisted companies. We can invest in companies that are smaller in scale, just given the less concern that we need to have about liquidity. Very happy to be looking at areas that are out of favor. Definitely try to be early and have a long-term focus. So, I mean, I really think there's a range of sources when it comes to potential in investment ideas. But in any industry, we're trying to, I'd say, map the industry. So really understanding the underlying fundamentals, the competitive landscape, key suppliers, customers, really just trying to understand all the players. So as part of that process, we're generally meeting with most of those players. We're trying to understand how the power balance is changing over time. And it's through that process we find new ideas. In terms of the holding period, if you look at the turnover for the fund, it's generally sort of been in the 30% range. So if you sort of back into that, you're probably looking at an average holding period of about 3 years. And I think that's probably normal in quite a volatile market like China. You do need to be adjusting positioning based on the risk reward that you're seeing in the market. But I'm quite happy to own companies forever, as long as the valuation is reasonable and they're executing. And there are some stocks in the portfolio that I've held, over a 10-year period. Yeah, so it's been a challenging market in China over the past year. So if we look at the 1-year numbers through December of last year, the fund was down about 17%, and that's versus the market, which was down just over 21%. So not great that we've got an absolute loss over the year, but still beating the index. Over a 3-year period, we're up just under 60% versus the market, which was up just under 20%, and over a 5-year period, up just over 70% versus the market, up just over 40%. And I should say those are NAV returns. So the share price has actually done better than those numbers as we've managed to close the discount versus the NAV over time. Yeah, I think the most favorable environment would be one that's normal. Really not too strong, not too weak. An environment that just rewards companies that are sort of able to deliver the earnings over time. In terms of an environment that would be less favorable, I'd say it's definitely the weaker environment. And the reason I say that is the fund does have a small to mid cap bias. And in sort of weaker environments, often you see liquidity come out of the market, and that can be an impact. Somewhat offsetting that, I do have a quality bias. I'm looking for sort of companies that can steadily grow over time. So that somewhat impacts that. But generally in weaker environments, the fund will suffer. But as we know, when the market normalizes, as long as the companies are executing and delivering the earnings, the stock prices come back, and that's generally what we've seen, how things have played out over time.